Hey traders, this is Mark from TradeDeskPro. Another video analyzing the financial markets. Before we start, a quick look at the risk disclaimer. I'll leave this up for a few seconds so you can pause the video and read everything. Basically everything here is for educational purposes only. This might be a quite lengthy video because I plan to cover first and foremost the US dollar, the DXY, and the FXCM US dollar index, because we are looking at a very, very important next few weeks for the dollar. After that, I will look at the majors. After that, the crosses. After that, some indexes like the DAX, the SPX, and the Dow. And finally, commodities, US oil, gold, and silver. So let's go ahead and start with the DXY. And I am well aware that since this is a educational video, that many people do not know actually what the dollar index consists of. So I've got the Wikipedia entry, and here you can see, so the euro is actually weighted with 57.6%, followed by the Japanese yen, pound sterling, Canadian dollar, Swiss krona, and the Swiss franc. So many people think, oh yes, the dollar index is going up or down, has influence on the Kiwi or the Aussie dollar. Yeah, of course it has influence, but it is not part of the DXY. Okay? And if we're going to look at the FXCM dollar index, and the FXCM US dollar index is actually a weighted index. 25% consists of the euro dollar, the British pound, the Japanese yen, and the Australian dollar. So the US Canadian dollar is not part of it, for instance, and nor is the Kiwi or the Aussie. Excuse me, the Aussie is, but the Kiwi isn't. Okay, so keep that in mind if you follow or base your trades on either the DXY or the US dollar. Make sure that you know what you're trading against or what you're trading with. Okay, let's look at the DXY. This chart, this pitchfork, has been phenomenal, excuse me, for the last basically 8-9 months. It has been so useful to have this fork here, because you can see the median line has been resistance, support, resistance. Is just a dream, you know. If you know what pitchforks are all about, whenever the lower parallel gives support, which it has been doing for 1, 2, 3, 4, 5, 6 times, it was bound to get to the median line, which is one of the empirical studies have shown that if the lower parallel holds, there's an 82% chance that price will go to the median line, which happened. Okay, now what are we looking at? So let me zoom in for a little bit. There's another line or sliding parallel that has been really important for since March, basically, last year, and that is this one. And to be, give it a little bit more clarity, I will make this purple. I've got too much purple now, but so let me give it another color, which will really stand out. Now let's make it red and make it a little bit thicker. So since last year has been resistance, 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 resistance. I mean, I can tell you like 50 times resistance, resistance, support, support, and here we are. So I'm really thinking, yeah, this is not going to break anytime soon, especially not after, let's call this one try, let's call this the second try. So we might still, you know, have a go at it, so to speak. But usually important levels like this don't get broken the second time. So that's why I'm looking for, before we have a breakdown in the US dollar, one more high. Okay? I mean, one more high, one more wave higher, or one more shift higher, and that's where this area becomes interesting. Why is that? Because it's, first of all, a 61.8% retracement of this latest move down, and I love 61.8 retracements. Second of all, it's right at this parallel, which could provide resistance. Okay, so I'm looking at this before the big breakdown. Okay, now if we go to the US dollar, we got basically the same scenario. And Mark, what are all these lines? You know, they make me crazy, and they make me want to throw up. So let me zoom out a little bit, and I can tell you that for the last 3 years, this fork has been phenomenal for support and resistance. Resistance here, median line has been support, support, support. Lower parallel has been support, support, support. So this is something that I want to keep front and center at all times. So now you know where those lines come from. Now you know why I'm so interested right now in daily closes below this red median line. Okay, and the same like the DXY. I'm thinking let's have one more shift higher and then lower, then up a little bit and then lower. And you know, the real targets, if the dollar is really going to break down, then we might be looking at 11,000 again on the FXCM US dollar, right? Now what's important in the meantime, there's a trend line here, 1, 2, 3 touches, so quite important. So this might be an area or a resistance or a support level that we should be aware of. Another thing is an internal trend line, this one. So starting from here was resistance here and was support here. So parallels of this line, off of this line, sorry, I've been drawing them here, here, which here was a little bit of support. Maybe we'll get there. Right here, support, which is like 12,390. Then go up test resistance, and then go down again and down again. Okay, what does that translate to? This is what I'm going to be using these DXY and US dollar. Yeah, what I think is going to happen is going to translate, of course, into all my analysis of all the other pairs. Okay, so this was DXY and US dollar. Next up is the euro dollar. Actually, everything that I talked about in my video of the 7th of January pretty much played out the way I thought it would be, or it would do. If you want to look at it again, this is the link. Now let's go to the chart. Let's zoom in a little bit. So what happened, we did test the 2017 open, then we went up to the green sliding parallel as I figured. Sorry, I was just adjusting it a little bit. Has been resistance, very nice resistance, by the way. What do I think will happen next week? We could still, in line with the DXY and the US dollar, which I just talked about, we could just extend a little bit higher. It's possible. The 107.10, 107.15 area. After that, I do expect a little pullback to test the breakout area, which I call the red line, or the red line is the breakout area for me. So we could get down to either 105.80 or, and there is a 4-hour reversal level a little bit lower, that is around 105.55, 105.57. So that's what I'm thinking. Pull back and then higher. This would also be in line with, you know, inauguration, Trump, his announcement of plans for his first 100 days, and so on and so on. I do think we are, just like the US dollar and the DXY, we're in for a weaker dollar going forward, which would definitely translate in a higher Euro USD. And talking about fundamentals, Germany inflation 1.7%. I also talked about that in the video last week. Europe is also coming out of the recession, so to speak. So that will translate in a higher euro. And combine that with a weaker dollar, then we're talking a huge move in the euro dollar to the upside. Okay, so levels for next week, be wary of a daily close above 107.15, and I would say, you know, opportunities to buy the euro dollar if you're not already in it would be 105.80 and 105.57. Next up, the dollar yen. A lot of people aren't going to agree with me on this one. Everybody's already looking at targets below 113, specifically 112.33 would be a target if I was trading it to the downside. I'm not actually. I'm very weary of targets that become bigger and bigger and bigger and bigger. So what I'm looking at is this support to hold, which is 114 basically. Could go a little bit lower, 113, 32, 36 actually. But then I would think that would be the range we would trade in for, which might be a really long time. You know, like 113.30s and 117. And why do I think that? You know, if we scroll back, the best example would be this here. We went up, went down, and then we traded for months and months and months into a range. I think this could be happening again. And if that's not the case, that the range would be this small, then I would look at this move here, the retrace, and then for a few months trading into a triangle. So I'm looking the same. What is happening now? I could be wrong. This thing could, you know, drop to the next sliding parallel here in a matter of days, which would put us at 112. It's possible. I just don't think it is going to happen. Okay, that would be in line with my dollar analysis. Anyway, if we don't go up on Monday or Tuesday, Monday and Tuesday, Monday is always a really weird day, so Tuesday I would like to see the confirmation that there's temporary dollar strength going on, and that it would translate to the dollar yen. Do not underestimate the Bank of Japan. They didn't go through all this trouble to just let it go down again. All right. Okay, next up is the Canadian dollar, eh? I really think that it doesn't have a lot more to fall down, eh? We're right at the 200 SMA, eh? That means should be getting at support, eh? Also, support level could be 130.76. The spike down was right at the 50% of the entire move up since April last year, which would give me a little bit of credence that we should be going up, especially with oil. I'm looking oil towards $38, $37 a barrel. WTI, of course. So that would give, you know, conviction that the next move will be up. From where? Could be a little bit lower, because normally a spike like this is never left alone, except in this case, of course, which actually we're at the same level right now. Spiked down and then just went up. So this is what I think is going to happen. As long as we're in this fork, this could be resistance, which is also the 38.2 from the entire move up. So could be we go up, test this sliding parallel again, and then go up here or higher. That would make sense to me. The Canadian dollar, even though it's correlated correlated to US oil, and the Canadian GDP is only 8.9% dependent on oil, which is weird. But hey, if there's a correlation, then let's play it that way. Mark, where do those blue lines come from? And that's what I wanted to show you by zooming out. Those are just sliding parallels of this trend line, which has been phenomenal for years and years and years. So if you look at this parallel, the low here was the low here. So if you're into slope analysis, this is the slope of influence to follow. Alright, and that's why I keep replicating these slope lines to give me some sort of indication where price is going to go. Okay, so what am I looking at? Let's say 130.72 could be support to go long for at least 133, and really nice targets would be 135.54, but I do think it's going to go higher if we leave the fork, of course. You know, and this is weeks away. So higher, then lower, then higher, and then even more higher. Okay. Next up, the Australian dollar. All right, mates. Let me start by, trying to explain like a teaching moment here. As you can see, this fork right here has been phenomenal also in support and resistance for basically all of last year. Alright, so we got a touch of the upper parallel, got rejected, went to the median line, went to the lower parallel, got rejected, went back to the median line, was resistance for like months over the summer. Then we broke down, went up again, broke down, went up again, broke down, went up again, and right here we were trading at this lower parallel. And since prices, let me put some arrows here just to show you, price consistently failed to reach the median line, which is, in Andrew's pitchfork talk, a little bit of divergence. Even though that price still went up, it was still unable to go to the median line, and the distance between the median line became bigger and bigger, and that was a sign that there was a change in behavior and that the direction would be down. Okay. Alright, so now we've got a new fork. This is a different one than you've seen in my tweets. I had this one going on, and I still think, let me show you quickly in purple. This is the fork that I had. Let me put it back to some light gray. Now I'm thinking this is the better fork, but there is one caveat: it hasn't reached the median line yet. So I've tried to draw it differently in a few ways, but so everything regarding this fork now is just wishful thinking. On the other hand, where price is right now. As you can see, this level has been support in March 2 times. Here it wasn't. Here it was resistance. Here it was support. Here it was support. Here it was basically support too. Support and resistance, resistance, resistance over the last, let's see, 2 months. Basically since beginning of December. So we're at a very, very, very important level, especially with the 200 SMA here. And we've reached the 50% retracement of this move down. Now what am I looking at? So we could still go higher. Even though RSI doesn't support it, because that's why I drew all these arrows here. You know, 60 on the RSI 20 has been resistance for so long. So it would really mean a really big drop in the dollar, basically, or if the Aussie, and you know, Australia doesn't really want their currency to appreciate. Really, they don't. So this move was already a surprise for me. We risk would be for me 75.42 up until 75.54, 75.57. That would totally be everything that I can think of, and spikes. Maybe inauguration will give spikes. Then I would be looking at this level as the last line in the sand, you know, 76.23. But I'm still looking down. It's a bit difficult now because that's a huge range. It's not something where you can sell into, because it's basically 130 pips in a pair like the Aussie. That's a lot. Okay, so let's see what happens if we get some meaningful closes under. Why is this? Sorry, I have to get rid of this because that's not the 2017 open. 2017 open is, ooh, yeah, if I forget to take out the text, then it shows every time. The 2017 open is way down here. Okay, and basically it hasn't been tested yet. And you know, I'm a big believer in testing year open levels. So it's a stretch, but it might happen, which would also support my theory that if 60 RSI is rejected, like here, then it's going back to the 40 or below 40. Okay. All right. Next up, the Kiwi dollar. It's been very frustrating to trade this, especially if you're bearish, because I was bearish at the 61.8 at 71 basically, and we just did some really weird moves here. I'm still thinking it's imminently gonna turn down. If it doesn't, so this would be these would be the initial targets to go down when it goes down. Why this text says the 2016 year open, I don't know, but I'm going to change it. Oh, that was the wrong one. I'll change it here. Alright, so the 2017 year open should attract. Is it going to be from here? I don't know. Do we have a lot of upside? I don't think so. But if we do, same thing as with the Aussie, this fork, you know, perfect upper parallel, lower parallels respected, behavior change here, and now this is a mess. Let's just call it that. Kiwi is always, either it's so clear and it just keeps going in a direction once it chooses a direction, or we have things like this. So where to start become bullish, that would be above this trend line and above this daily reversal level, so above 72.78, I would say then there's something going on with Kiwi. Then you gotta look much higher. But the, you know, the economics don't support that either. Okay, so look lower, wait until Tuesday, see if we can close below the 200 SMA, and then look lower. And last but not least, for the majors, the cable, the pound US dollar, very interesting level here. If we would envisage range trading until something is being done about starting this Article 50, and if we get a little bit more knowledge about how they are going to go about doing that, then we could be in for huge moves. And of course, the dollar strength from the last 6 months can also be attributed for, especially in the US dollar index, for a quarter, and in the DXY for a few percentage points. But if you really see the move down, even if the pound has just a little part of the DXY, you can imagine that a lot of the dollar strength has been coming from the pound. So that's why, what are we looking at? This sliding parallel, the red one, very important, very precise at some points, so it could be a reference, especially in the last 2 weeks, except for this spike down on the Trump non-speech, because okay, no politics. So what's important, let me zoom in a little bit. Of course, this level here, it's 1.2088, so that should hold. If we are to go down a little bit more, as would be in line with the DXY and the US dollar analysis done earlier, so we could go down a little bit more, but then I really think we should, or we will, go up, and then this green sliding parallel becomes into play. So if we are to end next week with the inauguration going on, we could get back to the 125, which would be a big move, but that would be, you know, positioning into the inauguration, and you know, uncertainty of the markets, and especially the dollar, for what Trump is going to announce, what he's doing with the Affordable Care Act. Is he going to replace it without an alternative? What is his 100-day plan is going to be? Is he going to really be able to keep his promises, building the wall, and let Mexico pay for it? Now he's already crawling back and saying, oh yeah, the taxpayers will pay for it in advance, and then we'll get the money back from Mexico. I mean, come on, seriously. This is all stuff that is not very, that is not going to give a lot of confidence into the US dollar. Okay. All right, so watch out for a higher close than the one from Friday. What is it? It's a higher high. I mean, it's 122.32. If we can close above that, which would also mean a close above this median line, then look up. If not, we could go down a little bit more. But I do think that this range will be respected. It has been respected here and here and here. So it would take some really bad news and a bad catalyst for the pound to go lower. Okay, thank you for watching this video, and there will be another one where I discuss the crosses, and probably another one, a separate one, where I discuss the indices and commodities. Thank you, and have a great weekend.